Hi guys, I hope you're good. Let us look at the US30 aka Dow Jones chart. So as you can see, I have the monthly chart open, and one interesting development that happened is that we had an overextended W formation in that region, with the neckline being in that region. However, we never really got to see price come back to test the neckline of this particular overextended double formation, and that is what we may see happening in the future. And especially because we also have this candlestick over here, which is a bearish candlestick with a small body and a long lower wick. So that tells us that we have a whole lot of liquidity sitting at this level, and that as I say guys, that in the future we might see price coming to this level to test that neckline and then possibly continue going up. And that is because when it comes to W formations, ideally we'd love to see price break the neckline, come back to retest it, and then push further up. So what I'm going to do now is actually add my Fibonacci retracement tool just to see if this particular neckline of this W formation aligns with any of the key numbers on the Fibonacci retracement tool. So just bear with me. Before I actually add my Fibonacci tool, I think let me just add a neckline. There we go. I'm just going to add a neckline to this region. There we go. And then I will then add my Fibonacci retracement tool. Just bear with me. Let's see. So guys, we can see that this neckline of this overextended W formation is just about in line with the 61.8% Fibonacci retracement tool. So should price come to this level over here where this neckline is, we would look for buying opportunities. We would look for buying opportunities. Nonetheless, let's continue. For now, I'm just going to remove this particular um, Fibonacci tool. But as I said guys, the most important thing right now is the fact that we have this candle, which is a bearish candle with a lot of liquidity stuck at the bottom, which tells us that the market in the next coming days or weeks, in my humble opinion, will come to this level to at least grab that liquidity before pushing up, or it may come to this level, which is the neckline of that W structure, and then push further up. Nonetheless, let us continue. So we also had an M formation in this region with the neckline being there. The neckline has also been broken. We are, however, yet to see price come back to retest the neckline and then possibly push further down. So what I'm going to do is add a neckline to that structure as well. Just bear with me guys. So we can see that our neckline is somewhere in that region. And just remember that a neckline is not an actual line. It's more of an area. It's more of an area. It is not an actual line. So let's continue. Another thing that I'm going to do is I'm going to add a line to that particular candlestick that is carrying all of that liquidity, so that we don't forget about it in the future. Okay, there we go. So from here, what I'm going to do is head over to the weekly chart. So here we are on the weekly chart. In fact, this US30 chart is very much similar to the Nasdaq chart. Anyway, let us keep moving forward. Here we are on the weekly chart. So what do we see on the weekly chart? So on the weekly chart, we spoke about, or rather on the monthly chart, we spoke about the fact that we have an M formation in this region and that the neckline is there. We saw price actually, now that we're on the weekly chart, we saw that price broke the neckline and then came back to the neckline to retest it. So we would have looked for selling opportunities in this region, and if you manage to get a sell on Friday or Thursday, good for you. What I would do is I would hold up until price reaches this point, and this point would be my first take profit area, because this point is an area which has a whole lot of liquidity that needs to be triggered by the market. So what I'm going to do now is actually add the, or rather my Fibonacci retracement tool, just to see if this neckline actually aligns with any of the key numbers that we have on the Fibonacci retracement tool. So just bear with me, guys. So we can see that the neckline actually is in line with the 61.8% Fibonacci retracement zone, which makes it a very important level in as far as looking for selling opportunities goes, right? So if you manage to get a sell at this point, I would say hold up until price reaches this zone at least, which is where we have that candle filling that needs to take place. So let's continue. I'm just going to delete this tool, and then from here what I'm going to do is head over to the daily chart. But before I do so, let me just point out that as much as we have that huge structure that we spoke about on the monthly chart, that huge M structure, that is, we also have this M structure over here with the neckline there, right? Nonetheless, let's move forward to the daily chart. So here we are on the daily chart. The first thing that I'm going to do is add my channel. Just bear with me. There goes my channel. There we go. Let's see. There we go. So what do we see on the daily chart? What do we see on the daily chart? On the daily chart, there are a whole lot of informations. Just bear with me. On the daily chart, we have a whole lot of informations. We had an information here with the neckline being there. Price came back to retest that neckline, and then we had another information here with the neckline there. Price came back to retest the neckline, and then we had another information here with the neckline being there. Price broke the neckline but went back to retest it again, and then we saw price coming down again. So excuse me. We said on the weekly chart that at this point we should be, or rather we should have been looking for selling opportunities at this point. So over and above that, we just need to keep in mind that as much as we have all of these informations with necklines, we also have this huge W structure over here, right? And it also has a neckline there. So if you sold at that point, you just need to keep in the back of your mind that price, instead of coming to this point, may actually bounce here and then go up because of this huge W structure. And that is because when it comes to W formations, ideally what we'd love to see happen is price break the neckline, come back to retest it, and then push further up. So that is what may possibly happen here as well, right? So what I'm going to do is actually add a neckline to that W structure, because it's also very much significant, even though at this point we are speaking about looking for selling opportunities. There goes our neckline, right? So also on the daily chart, we have this candlestick. It is also a liquidity candlestick, which serves as a double confirmation that price has to come to this point, in my humble opinion. So what else do we see on this chart that is significant? What else do we see on this chart that is significant? Another thing is that price, as much as we have this W formation tool, price is in the process of forming an M formation with a neckline there. However, the neckline is yet to be broken. So from here, let's go to the H4 chart. So here you are on the H4 chart. So the first thing that I'm going to do on the H4 chart is just make sure that my daily chart is accurate, or rather my daily channel is accurate. Just bear with me, guys. There we go. There we go. Okay, there we go. So the next thing that I'm going to do is on this H4 chart add my channel. So how would I add my channel on this particular chart? Let's see. How would I add my H4 channel? Let's see. Just bear with me, guys, while I add my channel. Let's see. I'm trying to find the best way to add my channel. Just bear with me. I think this is probably the best way to edit at this point in time. Let me just fix it. There we go. So there goes our H4 channel. So what do we see on this H4 chart? So we spoke about um, that huge W structure here with the neckline there, and we also spoke about that huge M formation that has a neckline here, and we said that yes, we should be looking for selling opportunities. However, because of these two opposing structures which have necklines that are more or less in the same region, it's very much risky to sell over here. However, the bias is negative, and that we should, I think, be looking for selling opportunities. Nonetheless, if you want to be safer, in my humble opinion, the best way to go about selling is actually, because we have an information here again with a neckline there. The best thing that I recommend is that you wait for price to close below the neckline of this information and the neckline of that W structure, which is here. Wait for price to close below these two structures in addition to this channel as well. Wait for price to close below this channel as well. Once that has happened, then wait for price to go back to retest the neckline of this M structure as well as this channel, and then look for further selling opportunities to around that point where we have that candle filling that needs to happen, right? So I hope it makes sense. Let me just recap. um because we have this information and with the neckline being there, and we also have this channel, wait for price to close below this neckline as well as the channel, and then for it to go back to the neckline to retest it, and then look for further selling opportunities at this point. And your take profit should be this point over here where we have that candlestick that has a whole lot of liquidity that needs to be grabbed by the market. So that is my analysis in as far as US30 goes. If you have any further questions, just let me know. If there are any other charts that you would like me to have a look at, just let me know. Peace out, guys.